Hello, this is Steve Schwartz with the RQ EDU Trade Lab. We're going to be presenting Gnostic and the RQ channel basics, which is going to focus on trend and momentum trading. The most important part of the intro is to understand that the purpose of this trade lab, RQ EDU and IQ Room, is strictly for educational instructional purposes. It's not for trading advisory at all. It's not a trading advisory service and shouldn't be construed as such. Past performance is not indicative of future results. Well, what we want to do is make sure that our members, our community, stays objective. Staying objective is just, in other words, looking at a screen and at a glance being able to determine whether you're a buyer or you're a seller in a moment without having to analyze. That's the first thing. Where you're going to buy or sell is another matter. But at a glance, know emotionally, without any analytics that you have to go through, that you are either a buyer or you're a seller. Once understanding the market sentiment, assessing current market conditions, whether the market conditions are risk on, risk off, and those are defined by the S&P and Treasury notes as institutions move in and out of the equities into the Treasuries, is called risk on or risk off. Risk off, of course, would be risk aversion. Risk on is looking for volatility for higher yield. So the institutions will flow in and out of the S&P and the Treasury notes, defining what we refer to as market sentiment or trading environment. Well, then step 2 in our sequence is market selection. Once we at a glance know what the trading environment is, we then can want to be able to select a specific instrument that holds the highest probability of either a trend evolution or a trend continuation. So we go through market selection in this tool called the RQ Tech Next Stream. It identifies bullish and bearish price velocity, and all of this is going to be seen on my application. I use Ninja, and you'll see that very soon. The third step is the alpha model, or what we refer to as trade signals. Alpha model stands for trade signals. We're going to be looking at Gnostic. This is a trend trading leading indicator, giving you a very early warning of a new trend that's establishing. Or RQ channel, which is a momentum indicator that appears on the chart and identifies optimal points within a trend that, if broken above, break out above, bullish or bearish, I should say break above or below, but broken above or below, it will show an optimal point where there will be the highest probability of continuation of that trend or acceleration of that trend, either or, for the highest probability of getting in and getting out. It is by no means an indicator that is meant to look at a price and be in it all day long. So trend and momentum trading is what we're going to be looking at today. The trade signals are broken into the Gnostic levels. They define the bullish zones and the bearish zones. They're forward-looking indicators. They are predictive. They take place at midnight. They set at midnight and they stay static for 24 hours. The Gnostic trend trader integrates tectonic accelerators. Let's just call them accelerators for the rest of the day. The accelerators come in a form of 5, 3, or 1. The 5 is the highest quality of momentum. The 3 is either overbought if the price action is in the bullish region of the chart, or oversold if the price action is in the bearish region of the chart. Those 5s and 3s appear as green numbers or red numbers. When they are green, they are on the bullish region of the chart. When they are red, they're on the bearish region of the chart. So in trend trading, we're looking for the 5s to enter, and we're looking for 3s and 1s for exit. Remember, 3 is extreme. If the market is in the bullish region, a 3 would be overbought. If the market is in the bearish region, a red 3, we would be oversold. Does that make sense to everybody? You'll be seeing this live very soon. Can I just get a poll? Yes, no, and if no, I'll make sure that I address it more deeply later. So, it's a simple numeric system. We see 5s, 3s, and 1s. 5 is the highest quality of momentum, so we're looking for that in the given time period, a 1-minute or a 60-minute chart or anything in between. The 3 is extreme, so if it's overbought or oversold, we want to take alert. And the 1 is exhaustion. That might be that money is coming off the table, meaning short covering if it's in the bearish zone, or liquidation, long liquidation if it's in a bullish zone. And once again, the RQ channel is that breakout momentum indicator that's already appearing after the trend is evolved and the momentum is breaking to the upside or the downside and accelerating. So what we're going to do is take a look at the macro technical, how we start our day. And then we're going to come back to this screen for just a moment. But how we start our day is with the RQ crossbox. This is online in RiosQuant.com. This is no longer a slide. We're online, and we'll come back to the slides in just a moment. And what we do is we look at the daily data. It's called the RQ crossbox. And the RQ crossbox is a quantitative ranking system that's giving us a ranking system, just like the 5, 3, and 1 gives you a set of valuations of quality of momentum in that 1-minute chart or 5-minute chart. Well, we have a quantitative ranking on daily data that's giving us neutral from 0 to +3 or 0 to -3. And what I'll do for everybody is give you, and that's easy enough, watch this, okay? What I'll do is I'll give you this link in your chat box for all of you to have. You can take it, grab it, keep it, read it. It'll be well worth it if you're a stock trader. It works very well for stock trading. So, going back. So based on daily data, we know whether the trend, the overall quant ranking, I should say, or the market sentiment is neutral, bullish, or bearish. Here's the pie for the day. Today's the 15th. This is what all of the asset classes look like. These are all the instruments that we cover. Now, we don't trade all of these at one time, but I will tell you that what you've come in touch with, if you're a discretionary trader, a retail trader like we are, this is an institutional model. This is not for the person that's just trading oil. And if you are just trading oil, let your eyes open wide, because there are many opportunities that you can rotate your attention to when maybe crude oil isn't going anywhere, or maybe you're an E-mini trader and it's just going static. We are not going to try to talk you into becoming portfolio managers, but what we are going to share with you today is a true portfolio model on how a retail or discretionary trader in our community looks at the markets. And what we do is look at all of them. But what we don't do is trade all of them. What we do is have tools that will pull out which instrument holds the highest probability of a new trend, as in a Gnostic trade signal, or a continuation of that trend in some form of breakout or acceleration, as in the RQ channel indicator. But in this daily RQ crossbox, as you will read, it pretty much first gives you a quant ranking. Now, I'll ask all of you this question, and I'd really like to see full participation. If you had something to tell you whether you should be aggressive with your position sizing or light with your position sizing before you place the trade, would it be helpful or not? Yes or no? Well, sure. And I know it's a rhetorical question, but did anybody ask you the question before I have? Let me start that way. Did any, if you purchased a training company or you had a mentor, hopefully a mentor would have been able to share that with you, but within your own training universe, did anything you read, hear, see, tell you that if you understood the market sentiment first before clicking, that market sentiment was really designed to tell you whether you should be aggressive with your position sizing, or let's just call it leverage, or light with your position sizing? Anybody teach you that? Because if they did, they're on top of their game. If they didn't, they're not following an institutional model. You see, Joe Rios, who developed all of this, comes from Wall Street real quick. 1988, he started with Prudential Securities and in fact ran one of their first managed security accounts. Managed, not mutual fund, but managed security accounts. It was called the Quantum Fund. And he grew through it, started writing algorithms. He's a math whiz, and architecture was his background in college. And then knew the two brothers that built TradeStation. And when Easy Language and TradeStation was made available, when the platform was first built, Joe was asked to be a part of the alpha test. So Joe Rios is a money manager. He's a commodity trading advisor. He still manages money today. Everything you see here, he uses. And you see, this is where there is a difference between us and many of the companies. First, there's a licensed commodity trading advisor that's offering his tools that he uses today. Second, the model, or let's just call it the methodology, is designed from a portfolio point of view. That means if you trade stocks and futures, this will work beautifully. If you are just trading futures and your focus is primarily on the E-mini S&P, but you don't see something going on in the E-mini, this will enable you to look at something else. And also in the RQ crossbox, define whether your leverage should be aggressive. So let's do this. If in fact the financials are neutral with the exception of the Dow Jones, which is green, meaning bullish, everything above 3 is green, and you'll find that if you read the PDF. Anything below -3 is going to be a -4, which will be bearish. You only see two instruments that are bearish and 3 that are bullish. So primarily about 70%, 2/3 of this pie is neutral. So what you want to do is look for the macro technicals first to see if anything is matching up on the micro technicals. So what we're going to do is look at the Dow Jones when we come on screen and see if there's any setup, and probably not, because it's already moved quite aggressively to the upside. But we're going to look at other instruments, and that's where the upside list comes and the downside list. We have a list that will tell us, look at these for long side opportunities first. If they are counter to it, you don't do it. Meaning, if they show up on the sell side, if this is the upside list, but soybeans are on the sell side of the chart, do you want to take that? No. If the dollar-yen is on the buy side of the chart, the bullish region of the chart, you would want to take that, or at least look at it as a candidate. So what this does on the daily data is represents what we all know or have used in one way, shape, or form in terms of trend line analysis what we've used as what's referred to as top-down analysis. So when we're looking for market sentiment on daily data, that's what this is based on. These algorithms are set each morning. We're looking at the top of the top-down, or what we like to refer to as the macro technical condition down to the micro technical condition, which is the intraday data that we're all executing on. So what we have on these upside lists is the soybeans, dollar yen, Dow Jones, NASDAQ, GBP. Resistance, bullish. We have pattern descriptions. If you want me to go through some daily patterns, I will today. If you're curious as to and you want some form of an analysis, I'll be more than happy to give it to you. The downside holds just silver and copper. And as you can see, coincidentally, because they don't have to be bearish to be on the downside list, as you can see on the bullish, you see a couple neutral quantitative rankings, but still on the upside. Just coincidentally, on the downside, you've got silver and copper. Well, we'll take a look at the copper. So now you know how we follow the market sentiment. Let's go back to our chart. And move on. So now we know what our market sentiment is and how our position sizing will relate to that market sentiment, aggressive or light. What we want to do is select the market. Which market holds the most promise? Well, we have what's called next stream. Next stream lies within this overall frame. In Ninja, it's called the market analyzer. In TradeStation, it's called radar. Well, in Ninja, which I use, it's called the RiosQuant market analyzer, which has a component indicator called next stream. And the next stream is a velocity component that's designed to help you identify momentum strength among multiple markets. Remember, we want to see where or which instrument holds the greatest promise of continuation or evolution into a new trend. So we know what the market sentiment is. We know what position sizing we have available to us, what is going to help us with position sizing. Now we have what's called the RiosQuant market analyzer. That's this whole frame. It looks like this in NinjaTrader and something similar to this in TradeStation. Well, it's broken into several different components. The first component, and what I see as the most important, is what's called the next stream component. Next stream is broken into three main segments of time, 1 hour, 3 hour, and 8 hour, but it has been designed and coded into multiple 30-minute pockets of time. And time rolls in and out of those 30-minute pockets. So if this is a 1 hour, you have two 30-minute pockets of time that time is rolling in and out of. If it's a 3 hour time segment, it's 6 pockets of time of 30-minute data points. And the 8 hour, of course, is 16. So you have two 30-minute data points, 6 30-minute data points, that's 8, and another 16 30-minute data points, which is 24. So what's happening is time is streaming dynamically through 24 individual 30 minutes pockets of time that's measuring price velocity, price movement in percentage terms. So like we have a quant ranking that daily data is telling us what the strength or weakness of a trend is or market sentiment is on the daily data. 0 to 3, 0 to -3 would be neutral, +4 would be bullish or higher, -4 would be red or bearish or lower. We have a rating of momentum, or what we call bullish or bearish driven velocity. Let's just call it momentum. We want to see dynamically the 1 hour, the 3 hour, the 8 hour, all across those 24 time periods show up green, be bullish, or show up red. This is where the highest probability of price continuation is, or an evolution of maybe a new trend. Maybe price action in crude oil in this snapshot started in the bearish region of the chart, but started trending higher, started moving just onto the bullish side, and we had all bullish momentum. And then we saw a 5. Remember the 5. This is what we're matching up, and how long does it take for that to do that when you can just at a glance know where the highest probability of price action, bullish or bearish, is based on a tool that's giving you bullish or bearish momentum. This whole system that we're going through, these 3 steps, market sentiment, market selection, and then trade signal selection, candidates and trade signal selection. This is that model that I was talking about. It's a 3-step sequence that we're going through. Here's the 3rd step of the sequence, the trade signal. So we've now known what the market selection is. We look over to the RQTech. It tells us where the momentum is, which instruments to look at first. Now we have 2 different signals, as I mentioned earlier. We've got the momentum indicator and we have the trend trading indicator. Momentum indicator shows up as blue channel lines or magenta channel lines that overlay the Gnostic chart, the Gnostic levels. A breakout above the light blue, of course, would be a bullish breakout. Notice that these double green lines are here, and the upper green line is the demarcation of the bullish region of the chart. This is an optimal point where, if broken above, is going to show the highest probability of continuation. If you're a scalp trader and you want to use this, take it, grab your money, get off the amusement ride. If you are somebody that wants to scale out, we will show you where your stops belong and how you scale your stops up. The other indicator, the Gnostic trend trade, is the 5. Looking for a 5 that's just closing above or below. A green 5 would denote the bullish close. And we're looking for 5s that will close right above the bullish Gnostic level. And it's called a qualifying 5 because the money management behind this is a risk reward of nothing less than 2 to 1 in your favor. We'll show that to you. So let's take a look at what these levels truly mean. The mid-level is called the bullish NOS level. We'll just refer to it as the bullish level from this point forward. NOS, by the way, G-N-O-S, is know, K-N-O-W, in Greek, or gnosis is the root word for knowing. So know the level. Know your bullish level. Know your bearish level. That's what NOS is. Got it? Any questions? Okay, no questions? We move on. So we have a bullish level and a bearish level that denote the bullish region of the chart and the bearish region of the chart. These double yellow lines are resistance levels, which I'm going to go to now on my charting platform. And they are targets. They are not meant to go long against, because we're going short here, or we're going short here on a Gnostic 5, and we're looking for these levels or just above as targets. But the resistance levels or support levels break the region into its own zone. Just remember one thing, that everything, all price action above the upper green line is the buy side only. And now let's go back. Let's get to, let's go into the 531 accelerator. And then we're going to my screen. The this 5, 3, and 1, as I mentioned earlier, are called accelerators. The 5 is the highest quality. What we do is we wait for a risk-reward ratio of 2 to 1 or better and then sell the open of the next bar in this example. We're on the sell side of the chart. It's red 5. It reminds you it's on the sell side. There's no confusion. This is what I meant earlier by knowing how objective this is. It's straightforward. Yes, you could have gone short here and come out here if you wanted. Or you could have left your stop and been a trend trader and let it evolve, because this is a trend trading indicator. Remember, Gnostic, and this is a Gnostic trade, is trend trading with the 531 accelerators. So 5 is the highest quality of momentum, 3 is the extreme, 1 is exhaustion, and look at the bounce. Okay, so now that we've kind of gone into the 531 accelerator, what we're going to do, and this is what a typical setup looks like, what we're going to do is go on my screen. My screen is a dashboard, and I want to just go through this one time. Price action above the upper green line, bullish region of the chart, buy side only. Price action on the sell side of the chart is the lower green line, sell side only. So you're only a buyer on the above the upper green line, and you're only a seller on the lower green line. And you can see the S&P has gone nowhere. It's stuck in the middle. It's going nowhere fast, and there really isn't a whole lot. I went long natural gas earlier on an RQ channel trade right here, and I just grabbed what I could get out of the market very quickly. This was $1.50, $1.40 I should say, or $1.40 to the upside, and I was very fortunate. But take a look. Here's the 3. Let's get rid of this. Oversold. Thank you. See ya. Oversold near resistance 1A. I'm out, and look what happens. Pullback. Now a 5 shows up again, right at the bullish level. Right here. High quality price momentum, but does it qualify? What's the risk reward? It's got to be 2 to 1 or better. Take a look here. We have a built-in calculator that tells you what the risk reward is. Very objective, very simple. You see a 5, if it's not 2 to 1 or better, you're not even considering it. Well, what you did see are 5s appearing at the lower end of the chart saying there is bullish accumulation. Now, what does next stream say? Because this is what I need to see for a potential secondary trade. And if we were back on my chart, I would have taken this trade. I would have had a buy stop. If this RQ channel came down, I would have taken that trade again. Why? Because this didn't qualify. It wasn't a 2 to 1. Price action came down, held with 5s. My RQ channel came down to the right place in the bullish region of the chart. I would have had this and taken this trade. It's okay. I'm not going to make every trade. So I took something. It doesn't mean I've got to run to natural gas again, but this was a clear outright setup again. Now that I've missed it, the good news is I've got a lot of things going on here. I've got the notes going bullish. That means yields are coming off a little bit. I've got the equities staying bullish. Okay, I want to find something that's going to correlate strongly with the equities. Lower yields certainly help with price hikes going up. Lower yields are going to help stocks a bit. Now let's go back to, I know there was another report that came out. At 9:15, just 15 minutes ago, industrial production was announced. The consensus was a tenth. Consensus range was minus 0.1% to plus 0.5. It came out stronger than expected. Well, just in reverse, we had the New York Empire State Manufacturing Survey that came out weaker than expected. Now, that's a regional. Here's a national. Industrial production came out stronger. So, what does that mean? Came out above. I should say the consensus was, where is it? I don't see it. Where did it come out? Prior consensus range. Was it revealed? 9:15. Wait, oh, I see. Hold on. Here we go. Actual. Weak. It came in at the lower end of consensus range. So therefore, it would make sense that yields would start softening up. It just gives Yellen, who is going to be our new chairman of the Fed Reserve, and she is a dove. She is an interest rate dove. She is pro-stimulus. It gives the market impetus, the Treasury market impetus, to move higher, meaning yields lower. Well, crude oil is an industrial commodity. We call it a risk commodity that will take on its characteristics of the ES and or the notes. We know that crude oil is oversold. Let's just take a look at crude oil. I took crude oil and just nosed out 5 cents a barrel. Now take a look at this. I'll show you what I based this on. Came out here, bought it at 01, took $50, missed the move here, but that was all right. And I'm not afraid to show anything that I do, win or lose, and these are the only trades I've done today. What happened was price action went static up against our RQ channel and then fell back, and I said, you know what? I got $50 here. I've got $150 in the natural gas. Thank you very much. I made my $200 or $210, and I was happy. If I can make my goal between two instruments, but look, let's face it, the natural gas was bullish. I took the natural gas. Crude oil was bullish. I went to the crude oil. I just maybe pulled the trigger a little bit quick, but I was happy. I added to my profits and made my $200 minimum goal for the day, pretty much. Now we're going to look for some other instruments. And what I'm going to do at this point is not only open it up for questions, but let you participate, ask me what instruments you want to see. But you know what? Look at this. Use what I've shared with you. Look at currencies right now. You see what's happening here? Dollar is weakening, or let's put it this way. New Zealand is strengthening against the U.S. dollar. Against the euro is strengthening against the yen. It's strengthening against the dollar. Its GBP is strengthening against the dollar. Why is that? Because yields are weakening on the U.S. dollar. And if yields are weakening on the U.S. dollar, the currency counterparts are just at this moment more in favor. Can you clearly see at this point how money is rotating into the currencies on the long side? Yes or no? And any questions? And if you're a currency trader, I'll be more than happy to point out anything and go through it. Maybe we can find a trade. Or for that matter, maybe we'll look at corn. The grains just opened up. I'm leaving it up to you. I'm giving you the chance to pick out a trade. Now, I know that many of you are former trial people that have requested trial. Here's your chance to get a close look, a little better look that's maybe in slow motion. Maybe you went into our trade lab, it was moving real fast, didn't make sense because it was moving fast. Well, here's your chance, because I'm opening it up to you. This is your lab. Are there any questions at this point? I'll show you one thing. You see the crude oil? This had two different opportunities. Remember we talk about the trend trading? Look at these fives. There's 1-3, but then it was only 1-3 at the lower end of the trading range. You're not going to say, well, the market's oversold here. Here's another 5. This is aggressive accumulation in quant language. You're getting a number of 5s, a bundling of 5s growing. It's telling you that the strong hands are in bullish hands, right near the bullish beginning of the bullish zone, the bullish level. So you can say to yourself, I'll take the 5 with the risk-reward ratio, or you can say to yourself, no, you know what, I want to see more evidence. And I have an RQ channel breakout right above here. That's what I did. I said I want to see more evidence in this case. So I decided to go where I waited it out and waited for the evidence to show me, I was willing to pay up, show me a breakout where I had the highest probability on this chart that there was going to be continuation. Well, it ultimately did, but I got tired and I just grabbed my half a buck, or my 5 cents, pardon me, and I added to my cash register today the 150 that I made off of the natural gas. And that was okay. But ultimately, I was long here. It did get up to that 55. And somehow I'm feeling a little bit of remorse. So you have two choices in this case. And the whole idea, and take a look at dollar, yen, you see these 5s right here? They may look good. Do they qualify? 1.5 to 1, 1.4 to 1, not any good. Besides, look at dollar yen, and Nextstream is saying it's getting bearish in the 1 and the 3 hour. Right? Dollar yen. You don't want to go long if you're seeing the 1 and the 3 hour bearish velocity sitting there and staring you in the face. Makes no sense. You want to see a straight across. Now, if yields are declining, that means the dollar will decline just a bit against currencies. It's time to look at currencies, either the 6E, futures, forex pairs. We are absolutely not discriminatory. Let's look at the 6B. Here's a straight across bullish rating. I can tell that it's in between the support levels with this trade zone indicator. So I'm going to look straight to the 6B. It'll be somewhere right around the yellow lines, right there. That may be an opportunity. Now we need that, remember, these are your targets, resistance 1A and 1B. So it's already hit a target 1. This is target 2. And we'll go back to that just one moment. Remember, bullish region, but up here is target 2. This is your farthermost region of the bullish region, and this is target 2. You're not selling anymore there. So here is an opportunity, and I am going to put in a buy stop. I'm going to put in a couple stops. Now this is a pending order that's resting. I am not going to just jump on it because the momentum is bullish. I want the momentum being bullish, but I want the odds in my favor. And the odds are only going to be, the full odds in my favor is if we're going to break an indicator that I highly trust is going to give me the highest odds of highest probability of that continued move in that direction. So I have a pending order in GBP with the possibility I'm going to put in a sell limit right underneath the critical number because I can't be guaranteed it's going to hit critical. Nothing's that perfect. I can assure you of that. Not our indicators or anybody's. And we'll see what happens with it. You see, when you look at this overall chart, you've got to take a look at what really is happening here. 6C is very bearish. Let me just go to that. Let's come out of crude oil. Let's go to 6E. I need to reload the historical data. Are there any questions at this point? Let me just encourage you to ask them. It'll be well worth your time. I'm sure of it. See, sometimes this happens, and I'm sorry that I have to do that, but okay, there we go. There's 6E. Looks a lot like the British pound, doesn't it? And the reason is that as yields climbed in this hour period after those reports, the dollar weakened. Now the question will be, will the notes continue its path up, fueling more strength, or is the momentum going to change? I'll tell you the New Zealand dollar, these next streams you can sort from weak down to strong, or you can reverse it and sort it strong to weak. Well, we're going to look at the New Zealand dollar, I can tell you that. 6E holds no interest to me, but I am interested in the 6N. We'll just watch the futures. And if you want me to look at Forex pairs, I'll be more than happy to. Let me take a question. I'm not getting any questions, so either I'm doing a good job or I'm putting you to sleep. Can I ask you for audio-visual evidence? Can you give me an AV or yes or whatever? Thank you, Bernard. Wayne, thank you. Thank you very much for the comment, Wayne. Appreciate it. Hello, Dave. Look at you. Dave VB. Awesome. Okay. So let's decide which one of these two hold the most promise. I could do a trade here. There's an RQ channel. But there's only 9 points to critical resistance. Here, there's 24 points from where I've got my buy stop and my critical resistance, right? Everybody see that? Which one would you rather be long? Be long here at 16 with 9-point profit potential on the futures, or be long here at 36 with, what do we have there? 24-point profit potential. Of course, this is easy. The zone, bullish zone 2, is far wider in the GB, British pound, than it is the 6N or the New Zealand, the Kiwi over the dollar. It's a no-brainer. It's an easy decision. It's very objective. you've got more meat on the bone, as I call it, with the GB. Now, there may be a lot of information being processed, you may think, or you may not, but one thing is for sure, you know what notes are. They're on the buy side of the chart. You know that yields are dropping. You know that yields dropping will have an influence on the dollar against its currency counterparts. It just makes sense. If yields are dropping, the dollar will weaken against its currency counterparts. And of late, it's just been the reverse. And as a matter of fact, since the unemployment number last week, coming out stronger than was expected at, I think, 205 or 204,000 jobs being created, the dollar started strengthening with the notes weakening. Take a look. Here you are. Boom. This is right after the report. Absorbed the report on Friday, but built somewhat of a consolidation base. Take a look at these levels. You want to see accuracy? Watch price action act near these levels. In fact, I'll tell you what. I'll show it to you on oil, where I wimped out and just took a small profit. Here's the New Zealand dollar getting ready to break. And you can see the New Zealand dollar has a very high correlation to the S&P 500. The S&P is bouncing right now. Now, its momentum is negative because it pulled back, but it's still on the buy side of the zone, right? We're still in the buy side of the bullish region of the chart, right here, right there. New Zealand dollar is starting to behave the same way, and it's getting a fuel off of the S&P. I want to show you some levels. Let's get back to crude oil. I won't be surprised to see, before we leave, another opportunity in crude. But I want to show you something, all of you. These levels, as I mentioned earlier, they're only set once. They're predictive, and they're dynamic. This gets set at midnight. So there is absolutely, if you trust the levels, absolutely everything to feel objective and straightforward about. If you believe and trust these levels, you can see that the bearish level dropped more than the bullish level dropped. They both dropped, but one dropped a little bit differently, so they're dynamic. But I want to show you, price action in London comes into the mid-levels and then goes static, right at that midpoint, bullish and bearish levels. Let's go back a little bit. Take a look at this. Price action, that's Thursday. Here's the report. This is the energy report. Sells off 20 cents. That's not going to be perfect, but it stops just above critical support established way back here at midnight. Look at how this came up, price action approached it, and then bounced all the way up to the resistance level 1A, which just kind of took a little bit of an uptick. Price action stops here and comes down and then overshoots it a bit, but holds in after that. Take a look at this. Midnight on the 11th. Price action goes static around the mid-levels, takes off, and then stops right at resistance 2 or critical support and final target. Look at this. This was the optimal point to go long, right here. See the RQ channel? I didn't do this trade. Sorry I didn't. Here is the RQ channel resting right at the bottom of the zone, bullish zone 1, right? Here's bullish zone, bullish region all the way up to here. Price action, this RQ channel showed up, and these are the setups very comfortably, very objectively we look for. We look for the RQ channel to be as close as to the bullish level or to the bearish. Look at that. Look at the bearish level was sitting right on top of the bearish NOS level. But unfortunately, it didn't give us an opportunity. You had some red 5s here that would have been able to give you a scalp of 10, 15 cents if you wanted it. But momentum probably wasn't all there. Take a look where it stops. And you will see time and time again, if you decide you want to take the trial again, and see it for yourself with a little closer look. Evis, I'm going to read his question. Bernard says he's not snoozing. Thank you, Bernard. Eva says, would somebody guide me in the beginning? Absolutely. In the trial, we give you 2 workshops and individual coaching. And if there is a high level of demand, there may be 1 or 2 of you in the same coaching session with me, because I do one-on-one coaching live, meaning we do this together and look for trades as you have, once after you've attended a couple of the workshops, or at least the 1 or 2 of the workshops, and have done coaching or watched the basics video that we send you. We give you complete support during the trial, and then as a member, it's ongoing. In our membership, there is unlimited coaching, one-on-one. There's a 90-day mentorship program. There is the trade lab that is educational intensive, but it does move rather quick, not as slowly as I'm moving. And if I'm moving too fast, tell me and I will slow it down. And just don't be afraid to share that. So Evis, no problem. All you have to do is email me and I'll be more than happy to make sure that Amber gets in touch. Amber Little is our support manager. If you can look in your chat box, here's my email address. And just get in touch. Dina says, let me go up on top. Is it common for the market sentiment to change after the news? Of course. The market sentiment on the daily data, no. It said one thing about 6:30 and it morphed into a completely different direction after the news. Absolutely. You want to know the top of the top-down analysis is just that, the top. And yes, of course, it's going to morph. So if it does morph and it goes counter to the quant ranking, Dina, you want to, if it's a good setup, you just want to lighten your position sizing. So if you have the micro, the intraday data, your intraday setup is going counter to what the market sentiment is in RiosQuant.com and the RQ crossbox, and you like the setup, just lighten up your position because you don't have the micro and the macro matching up. Therefore, all of the probability or odds are not going with you totally. But the levels are going to stay there and not adjust. They are there as your compass, so to speak. You know where the north end of the chart is from the south end. You know you're only buying on the north end regardless of market sentiment, or selling on the south end below the lower green line regardless. You can see how the 6N moved on its own. I'm still waiting for the 6B, but I'm not being discouraged. Not yet. I'm going to come down to Aussie crude oil. You can see crude oil after I got out. Whoops, sorry about that. Let's do this, pardon me. I know this annoys some people. I came out like a wimp. It spiked, but it still hasn't gotten and much higher. I had 10 minutes where it spiked, and I could have gotten out with better prices. It stopped at resistance 1A just below it, and now it's pulled back, and now it's floating in between the zones and the RQ channel. I think crude oil is done for the day, regardless of its momentum. So let's look at I'm going to keep this here. 6N is done. Let's take a look at the YM. YM, boy, it took off. It broke. And it broke above the critical, and it's still above critical. It's done. Let's look at the NASDAQ. See, this is where you can easily disqualify trades. Okay, now, let's look at the NASDAQ. NASDAQ at this point is bearish. It's also broken a 30-minute RQ channel breakout point. This is our 30-minute breakout. That little navigator setting is a 30-minute, and I'll show you what that is. See how we broke below the RQ channel right here? Doesn't mean that it's a short, because you can't short in the bullish region, right? No selling on the buy side of the chart. But it's telling you it broke an optimal, it did tell you it's breaking in a significant point on the chart. Now the question is, will there be some continuation on the NASDAQ? Well, we're not going to just rush to a decision, especially when the S&P is still sitting in the bullish zone. We're not going to go and try to short the NASDAQ and hope the NASDAQ's going to go rogue or on its own going short when the S&P, the benchmark leader, is still on the bullish side of the chart. If this happens, and this is what we're going to be watching, because this is the one and only trade that I'm working right now, we're going to watch the correlation of the notes, yields. If notes are going up, yields are going to soften to a degree, and what happens with the currency, the 6B. And we can look at others, but 6B is pretty decent. We can look at Euro-Yen, which is a cross pair. I really don't, go there very often, but there's the Euro-Yen getting ready to move into its bullish zone. 2. That may, if I see a green 5 on Euro-Yen, I might take it. So I'm going to go back to that. But you see where the Euro-Yen is in the priority list of strength? Let's go this again. That's weak to strong, or I can reverse the sorting, strong to weak. I'll keep it strong to weak. So Euro-Yen is at the top of the list with the New Zealand dollar. Well, we know that the New Zealand dollar doesn't offer a great deal of upside potential because it's very close to, there's only about 10 ticks to critical resistance. We already went through that. So the next down on the line is Euro-Yen. And I've already got a 6B trade. So here's the Euro-Yen. Let's open this up for a moment. Nice trend. 45-degree angle, almost. I like that. I like the overall pattern. Nice, easy going trend. Let's see if we can't get, we've got the 30-minute RQ channel broken. Here, see that 30-minute chart? RQ channel's broken it. We got broken the bullish. We should see a 1 on the euro yen. Here it is. That's a signal. It just alerts us to it. And now I'm going to look for a green 5. If I can get a Gnostic, or what I would call the accelerator, a green 5, I'm fine. Now I'm going to go down to the 5-minute chart so we can get a closer look. There's the 5, but it's in between resistances 1A and 1B. There won't be a risk-reward data number yet. There's zeros here, right? But if we can get and it's now we're breaking the bullish channel line. So I've got 2 minutes and a half roughly. The market is flirting with the RQ channel breakout indicator. If we can break out above that RQ channel momentum trade and also give me a 5, I'll be putting that trade on. We've got 2.5 minutes. And I don't have to wait for the 2.5 minutes and wait for the 5 because we've already broken that RQ channel. So what I'll do at very least is if the market starts moving without the 5, I will put in a buy stop right here. In zone 2, we do light trades. I would do 100,000 normally. And I'll use this RQ channel. Whoops. I'll use this. No, I just got filled. He came and got me, and I wasn't really intending to do that. I wanted my fill up. I wanted my stop at 26, but that's okay. I'll take what the fate gives me. Now I'm going to do a risk-reward ratio. Not a risk-reward ratio. I'm going to do a fib ratio and pull it down and determine where my target should be, and I'm going to put it at a 75 ratio. That was an inadvertent fill that I was not intending to get filled right there, but I will have to live with it. I wanted my fill at 26. That's okay. Win or lose, live or die, whatever. Now, where's my stop going to be put? I'm going to get rid of the text and just use marker. The stop is going to be placed right underneath the bearish channel line and what was resistance 1A. Now it should be support. I'm going to keep it about 3 ticks under. So I'm taking 15 ticks on 50,000. That's $75. I've already got $200 booked so far between natural gas and crude oil. So I'm taking at this total fill price of 24 down to 06. That's 19. That would be $95 risk of the 200 I've got paying so far. So that'll be it. We shall see. I would not have been filled had I just gotten the stop in where I wanted it, but unfortunately I did not release my mouse the way I wanted it to. But no excuses. Just is what it is. I would have liked to have a better fill. Okay, so I'm now in euro yen. Why? Because momentum is second in line, one of the stronger instruments on the board. It's broken the 30-minute RQ channel. The odds are good. Yields are holding in there. If we can see the notes continue to go up with yields declining just a bit, I'm looking good. And this, I've got 70,000, should have been 50. I moved a little bit too quick. That should have been 50, but that's okay. For purposes of disclosure and transparency, this is my simulation account. I do all trading in my sim account when demonstrating. Any questions? Dina, I'm not quite sure. I'm going to go back. Is it common for market sentiment to change after the news? Not in the RQ crossbox. It's daily. Okay, good. I made it clear then? Okay, you're very welcome. Okay. So while we're watching this for a moment, are there any questions, or would you like me to go to a different instrument? Let's have a look at soybeans. Ask any question you'd like. I'm going to have to, let's move this. I'm going to move that. I'm going to take the euro yen and move it out of the way for now. Here is an independent asset class. Look at soybeans. We've been looking at strong instruments. Let's take a look at a weak instrument. Wayne, thank you very much. But you're hanging in there with us. Let me share this with you because it's great. If you decide you want to take the trial, there is a lot of information. But it's totally objective. Would you not agree? If you want me to slow down, please tell me to slow down. I'll be more than happy to do that. But let's look at this and review. The S&P and the notes define the trading environment because we know that these two instruments have a direct relationship to monetary policy, interest rates going up or down. These are like the two conductors of an orchestra of instruments that are connected to interest rate policy. So contingent on what these instruments do with one another or how they behave with one another, let's just say if they're in synchronization on the same music sheet, the instruments that are in harmony with that condition, and this is right now pretty much in synchronization, but you can see it's somewhat turning mixed, meaning the price action of the notes are moving back to the bull-bear area, getting close to it, is telling you there's more neutrality within the trading environment at the moment. So when there's neutrality, meaning there isn't any real robust behavior in the trading environment, bullish or bearish, or risk on or risk off, and it says mixed, which means that one of these two are sitting right near the middle part of the chart, we look at independence. Why? Because soybeans, wheat, natural gas, and corn have nothing to do with monetary policy. That's why we call it independent asset class. So let's look at the soybeans. Here's soybeans. Oh, there's a trade that I completely forgot. I have no idea where that came from, but I'm going to close it. That's way off. That had to be put on days ago that I totally lost track of. That's going to screw up my performance on my sim account. That's not good, but that's life. It's okay. Like I said, we believe in transparency. More importantly, this is a setup. Now let's open this up. Oops, sorry about that. But soybeans bearish. It's one of the weaker instruments on the board. You're now breaking down. We're at 1302. Now let's look back and see if there's any price action below it that could be representing support and not allowing me to get down into the zone 2. Some price action here. Let's take a look at where that relates to now. No, those lows are down here, so the odds are pretty good that we're going to work lower. Because I'm already in a couple positions. I'm just going to point it out as an opportunity, and we'll keep an eye on it. We've got some 5s that are showing up. The breakout, the bearish breakout is taking place. I might end up taking it. Here we go, guys. There it is. I'm still watching for the 6B. That's really stuck in the middle. The euro yen, I have fallen behind by about 5 pips. It's all right. And we're holding in right here. Now I'm going to be closing the lab at 10:30. So take note where I'm long the euro yen. I'm long the euro yen at 135.24 with the stop at 135.06. I'm sitting resting with an order for the 6B, British Pound Futures, at 61.36 with a target of 61.60. Write those down if you follow it. So I'm interested in the soybeans because it's bearish. I just might take it. But being that it's already stalled a bit, maybe I'm just going to wait. Maybe I'll put the buy stop. In fact, I think I will. I will take it. I'm going to put in a sell stop, pardon me. Just underneath those lows that were already established. Here's the RQ channel at 02.50. We made 2 lows here. I might as well wait it out and see if they can't take those lows out again. Yeah, it's gonna be that right there, 13 3/4. They come and get me, so be it. And I'm going to scalp that. There's a lot of room there. That's 4 cents. That's $200. So I'll put in a sell limit, a buy limit right there. Dina, let me read what you have to say. Okay, Dina, email Amber. She'll be more than happy to do that. I'm not sure. I know that she's available, but she was available earlier, and she and I have an early morning, and in fact 15 minutes. That's my Skype asking me if I'm going to be available, asking me if I'm still here. But at 10:30 I have an important teleconference. So let's hope that the soybeans drop. I'm up 150. I still haven't gotten my loss. I haven't taken the loss yet. I've got this working. I'm risking $90 here, 19 points or 18 points on 70,000. So that's just a little bit more than I thought. But So I'm risking, let's just say I'm risking half of the 200 that I made, and let's just review that. Here's the crude oil. That was 50 cents. I became a wimp. I was going to call it my wimp trade today. Let's do that. Just review. That's the 50-cent trade. And then we go to the natural gas. This one was a little bit better conceived. I took the breakout channel right here. It qualified. It was a perfect set. It was a good setup. Even though it is higher in the zone, this did qualify. And we teach people when is the last time or the very last place you can use that RQ channel. You know, let's me ask you a question. Doesn't it make sense not to buy an RQ channel breakout way up here, right below resistance 1A? Of course not. So I took this here and I had a 14-cent gain. That's 140 plus 50, 190, and I gave up about 90 on that 70,000. On that, I'm risking 90 here. So bottom line is, I end up with $100 today. If GBP futures, the GB futures does not get filled, and I'm going to go back to the soybeans. Going after, I'm in. What happened here? Oh, this was the closeout of that trade that I forgot about. Right. This is my new trade that they're approaching. Good. That's the closeout of a trade that God knows where it came from 3 days ago that I completely forgot about, and would have probably made, sure, I would have made money, but forgot the trade completely. Just to show you. Now you know why I demonstrate in simulation. I took this trade right here, and I would have grabbed the money, but I forgot about it totally. And here's the fill, as you see it closed. Oops, sorry about that. Now I'm getting ready to get entered into a trade. I'm just about there. All right, so if I get filled, I'll get that little link. We'll just keep an eye on it for a moment. Next tick down is probably me. There it is. And we'll come back to it. It's now time for me to go back to the slides. All right. You want to be a quant? And you want to keep it realistic and objective, where this three-step sequence can be really accomplished in 30 seconds or 60 seconds or less. You know, there was an individual that said he's just processing a lot of information to be processed. There's no doubt. There is. Yet, believe it or not, waking up and knowing what your quant ranking is that's going to define your position size, it doesn't take more than just a moment. Going onto your chart and recognizing whether the price action is on the bullish side of the chart from the bearish side just takes a moment. Then scanning the different indicator, the candidates in the market selection, you need to go through a couple of those instruments that are bullish and bearish momentum, that are matching up with the leaders and the laggards, or the upside and downside list is now called. It doesn't take more than a half a minute, and then you just look at where the setups are. So really, at the end of the day, it's objective trading. It's keeping your eyes ahead. It doesn't take long to process it, which means that the latency between when you start looking for a setup after you found a market selection and where you find a setup is not very long. So what we'd like you to do is experience the power of market intelligence. We think we have something that's intelligent, that is momentum driven, it's objective. Once again, and I'm going to give you the link. You can email, and I'm going to do that here. Just email me directly. I'm going to give you the link in the right off of the PowerPoint. It's no big deal. Here it is. Let's get that link. Can everybody see that link? Can I get a confirmation? And if you've been in this room, I'll tell you now that 95% of the people that started at 9 a.m. with me are still here. And there's a reason. There's something a little bit different than what you've seen before. And if you tried it, no problem. If you have Ninja Trader, all you have to do is send your machine ID number. But let us be in touch so we can get you into the flow of the workshops we give, just to build a realistic expectation of what's to come. If you're here a second time, it means that you're still looking for something to learn from. And my hope is today you've learned something that you can take away with, regardless of whether you want to start a trial or not. But Wayne, we hope that you want to take that trial. There's a number of you that asked some really good questions. Stay engaged. It's free. There is absolutely no obligation whatsoever. Dina likes the market analyzer. I don't know anybody who doesn't like that market analyzer. It is very unique, and what has been put into that market analyzer is patent pending. Whether it's going to hold water and make it through as a patent, we don't know. And it's going to be a year before that we find out. But we're protecting that, at least for the duration of the pending. The cost of the service, it depends. And there's a good question. Stephen asked the question, the cost of the service. Well, you've seen three different indicators. You've seen the RQ crossbox, which is the market sentiment tool. There's coaching. We customize what you need to what you need. So there are a number of different levels and customizable price points, but I'll put it in these terms. The price range of everything you've seen is between $1,500 and $2,500, and the $2,500 includes ownership of the licenses, the three indicators, Gnostic, RQ channel, and the RQ Tech Market Analyzer. It gives you 90 days of our trading room, which this is not. It's a live trading room where yesterday we ended up making about 1.5% on a hypothetical $25,000 account. So there was about 3.25 that was made. That paid for a quarter on one trade, or actually in one day, pardon me. The performance in the lab is in the website. So the range is between $1,500 and $2,500. And we can mix and match. That's the beautiful thing about it. Somebody said that they really like the market analyzer. The gal, her name is Dina, she's in trial. She may decide after the trial that that's all she wants because she's got her own trading model, and I know that. So be it. Great. We're not going to push this on anybody. We don't have to. The one thing I will tell you is if you join us as a trial member and you backtest the levels themselves, just the levels, you can backtest RQ channel, the breakout indicator, but if you backtest those levels, I will assure you of one thing. far and wide, you're not going to find many indicators that are going to be that accurate in defining, first, where the optimal price bullish range is, which is the buy side only, creating objectivity, and the bearish range is. And then within all of that, where your optimal I should say support and resistance levels are. Quite objective. You find something more accurate, let me know. And the one thing that I'll finally leave you with is that they are not pivots. Pivots, the floor pivot will look similar or act similar, but are nowhere near as accurate as these levels. These algorithms were written 13 years ago. They've never been optimized. They work for stocks. So if you're a stock trader, they work every bit as good on Apple, Netflix, you name it, they work on it. That has a high beta. Of course, you want to have high beta. If you are a binary option trader or you are a swing trader in options, directionals, those levels and the RQ channel, fantastic, and they work every bit as good on stocks. So there's an added value to the ownership of the licenses. But to answer the question, $1,500 to $2,500, and we hope that that's within the range, Stephen, of budget for you. If so, there is no obligation in taking the trial. So once again, here's my email address for direct questions. And once again, here is the link. Can everybody see the link in the chat box so I know that you have the opportunity to grab it if you want it? Leah asked, can you do longer range prediction? Absolutely. We also have auto trading. It's called Einstein. We have an auto trading system that if you're more advanced and you want to take some of the pressure off and direct your interest in a more diversified manner, but you can't trade everything you want to trade manually, there's Einstein, which is fantastic. All you have to do is email me and say, want to take the trial, include Einstein. It's fantastic. That auto trader is terrific. And it runs on the same logic. Graham, we'll talk about that because you're looking at the overall package. Leah, I'm not sure I understand what you mean. I am pressed by time, so it is important to save time to me. I understand. This will be this will make you time efficient. This whole model of trading will make you time efficient. Just test it with no obligation. Guys, I've got to run. I got an important call that I'm being waited on by my team. I want to thank all of you. Please feel free to email me with any questions. Well, I guess I made some money on the soybeans. Here it was. Remember, I cleared out the soybean trade that I forgot about, but there's my profitable trade on the RQ channel, leaving you with a positive, or it would have been a negative. If I was stopped out, I would have had it. So right there, I sold it at 1900. What was that? This closeout was a trade that I literally just completely forgot about from 3 days ago. Sold at $1,300, $1.30 and a half a cent. Bought it back at 98 even. So that is 2.5 cents. That's 100 and a quarter. And I'm still live in that euro dollar with a $90 risk. So right now at this moment, realized net return in simulation is at this point $325. Guys, have yourself a good one. That was nice. Glad that happened for all of us at that point. Take care now. Leah, just email me or hit that link. Thank you, guys. Take care. I look forward to meeting up with you, Leah. Enjoy the rest of the day, and may the best trades be yours today. And if not, because it's Friday, take the day off. Be good to yourself. Enjoy the weekend. Take care.